Now, this panel discussion, of course, will give you an insight to what you're looking out in this sphere, and it is indeed an honor to welcome our dignitaries for this session. For the moderator, it's going to be Ms. Tanvi Ratna, founder, Policy 4.0, joined with the esteemed speakers being Mr. Sharan Hegde, founder and CEO of 1% Club, Mr. Pranjal Kamra, founder, Phenology Ventures Private Limited, and Mr. Neil Borate, editor, Personal Finance, Mint. So to all the audience out here, let's give them a warm, warm round of applause as we welcome our speakers and our moderator on the stage. With that, I'd like to leave it in the able hands of Ms. Ratna to take it forward with her curation. And once again, come on, ladies and gentlemen, a warmer round of applause for all our leaders who've joined us today. Thank you, and over to you.
Hello, everyone. Good afternoon. We are very excited to be here. This is, I think, the youngest panel at GFF. We're talking about a very unique set of issues. And today we're really going to dive deep into very new phenomena that are emerging in Indian markets with the advent of social media. As most of you know, Indian markets have almost tripled in user base just in the last 3-4 years, since 2020. And around 40% of these users are actually under 30 years of age. And that's a very big user base. It has a lot of implications for the way people invest, for the things they invest in. And I don't think my panel here needs any introduction. But for the sake of a lot of global members who are here today, it would be great if you all could give a brief introduction to what you focus on, the kind of issues you focus on, and what you do.
Sharan, you start, I'll think by the time.
I was going to say the same thing. Hi everyone. My name is Sharan Hegde. I'm the founder and CEO of the 1% Club. We are primarily into education in financial investing. We teach people how to invest their money, how to manage their money, how to grow their money, how to plan their taxes and stuff like that. And now we are entering into financial services as well. I began as a finance content creator. I still am. Primarily, create a lot of finance videos on Instagram and YouTube, LinkedIn, Twitter. So that's what I do in a nutshell.
Hi everyone, I am Neil Borate. I am the personal finance editor at Mint, livemint.com. So we write about everything that affects an individual's life. So whether it's mutual funds on the investing side or whether it's pensions, loans, etc. Anything to do with an individual's financial life. We are both in print and online, and yeah, fantastic panel. Glad to be here.
Hi, I'm Pranjal Kamra. I started as a YouTuber क्योंकि पैसे नहीं थे, and जब आए तो I ventured into Phenology.in. So I'm the founder and CEO of Phenology.in. So we call ourselves operating system of investors. So be it education, be it financial planning, be it stock analysis and discovery platform, financial products comparison platform, we provide everything under one unified affordable subscription.
Great, and I'm Tanvi Ratna, your host. I'm the founder of Policy 4.0. So we are basically an emerging tech think tank. We work on regulations for emerging technology with governments across the world. So we're excited to dive into the discussion today. So I think first off, Pranjal and Sharan, since you work very closely with the new gen investor, could you paint for the audience a picture of the psyche of the new generation investor? What is that persona of investor like? If you had maybe 2-3 keywords you had to use for them.
The new investor in India is actually very anxious and impatient. They are not used to telling them just park your money in safe assets and slowly build wealth. The new investor is looking for new innovative things which can make their money grow very, very fast. A lot of people in the youth right now are frustrated with their jobs. They don't like the idea of working until 60. And for them, learning how to manage their money, as they see it as a way out of the rat race, and they're very, very welcoming of new innovations and technologies happening in the world of fintech, and very, very hungry to learn at much more hunger than what the older generation had. Because for the old generation, it's just that for me to live, I need to work. But the new generation doesn't think like that. They are like, I don't want to work forever. Tell me something which will make me comfortable by the time I'm 40. And they're eager to learn about that.
Okay, very, very interesting insights there. Pranjal, you want to add to that?
So I'll add and go into more detail of what he said. And in fact, some of the things that worry me about these things, there are a lot of good parts, but I think the good parts are highlighted a lot. These many demat accounts were opened. No one actually sees how many demat accounts are dormant. I think we have the highest ever demat accounts, but we also have the highest ever inactive demat accounts. So we don't often see the complete picture, but otherwise, two things that really worry me, and I am partly to be blamed for that. People like me are partly to be blamed in our quest on making investing simple, really simple, breaking it down for people. We actually gave the impression to the people that investing is easy. And there's a big difference. Simple is something that's easy to understand. Easy is something that is easy to achieve. But investing is not easy. It's simple. And but the way last 3-4 years post-COVID have gone, the younger set of investors, they have only seen market go one way. So they are not to be blamed for it. People like me need to be blamed for it. We have projected it that it will go on like this forever and you just come in. Which I know, and I'm really worried that when the good tide will go away, a lot of people will burn not just their fingers, but a lot more. So that's what I'm really worried about.
Yeah, that's a very, very important point there, Pranjal. And I think, Neil, coming to you, because you cover a lot of stories around this, and data also says that of these 40% young, around 75% actually lose money, net. So what do you see in terms of this risk-taking behavior of young investors?
Yeah, so in a sense, I think Pranjal already said a lot of what I wanted to say. No, it's great. It's great when it comes from influencers themselves. But I'll just highlight on F&O in particular, because there is a SEBI study which shows that 9 out of 10 people lose money. And the way that F&O trading is popularized through influencers, through referral links, which only recently in the National Stock Exchange has stopped, is a cycle, in the sense that a video is made where you are told that you can make XYZ unrealistic amount of money, and if you open your account through the link that the influencer has put there, then he or she gets a cut out of every single commission that you pay the broker. This is not healthy. This was never healthy. This was practiced for years together, and it has finally been brought to a stop. A lot more has to happen. SEBI has outlined a plan to regulate influencers, and I hope that they are quick with it. They have already spent a year since their proposals last year, not really enacting anything. So I really hope SEBI gets on this fast.
Yeah, and we will definitely come to risks. I think we are going to discuss a lot of that. But before we get there, also for the audience's benefit, can you paint a picture of maybe the wackiest investment product or scheme you came across, which is targeting young users? And what do you generally feel about gamified finance products like fantasy sports and things like that?
Should I start?
Sure, Pranjal.
So I am really, intrigued by how these platforms exist. So these days, this opinion trading platforms are very popular. So, you can bet on anything. How many seats will BJP win? What will be the inflation number? What will be the RBI number? GDP growth? Anything. And not just, this shouldn't exist from the point of view of betting and all that, but also, in a way, they are circumventing all the capital market structure. Stock exchanges exist so that people can speculate in a regulated way. And when you start opinion trading, you're circumventing the entire capital market structure. So that is something I'm absolutely amazed. How can that exist? That shouldn't exist. You told about betting and fantasy. As a law student, I flunked law, by the way. 5 years of law I did in 6 years. But so my foundation is strong, so I remember a few things. They are allowed under a disguise that it's part skill and part luck, and it's not all luck. So if it has an element of skill, you can allow that. So all these big unicorns that we have that sponsor during IPL, they exist because it's considered that there's an element of skill involved. Now, to my mind, that's not justified because even Ludo has an element of skill, elementary level, primary level of skill, but everything has a slight amount of skill except coin tossing. But unless whatever you are allowing is substantially skill, and luck is a small part, like any sport, cricket, football, anything, small part luck plays, but luck cannot be a substantial part. So if you ask me, betting, gambling, absolute scams should be banned.
Wow, okay. Any other views on new kind of products and...
So India's financial system is extremely clever at finding jugaad and innovating. Extremely clever. There's one or at least 10 new products every year. So I'll give you one that came up recently, which was investing in agricultural land. There was a company called Gropital that was collecting money to invest in agricultural land in violation of SEBI's CIS rules, collective investment scheme rules. You can't do that. And eventually there was a SEBI order, but that came after a lot of people had put in their money and now their money is locked up in litigation. So it's a cycle that never stops. On the positive side, you sometimes have innovation which are rewarded and brought into the formal sector. So for example, with bond platforms, earlier they were all unregulated, offering bonds. Then SEBI came up with this OBP regulation, online bond platform regulation. They all came under it. Now they are offering bonds in a very legitimate manner. Something similar happened with what is called SM REITs, small and medium REITs. So there used to be fractional real estate. And SEBI acknowledged that this industry is out there. They're doing something interesting. Let's properly regulate them, bring them under the fold. Let them do their business, no problem.
Okay, we are off to the races. We're already talking about regulation and things like that. But I want to do a quick survey of the audience. How many of you invest in fantasy sports, or you've played in them or engaged in them? Okay. How many of you in the room think fantasy sports is gambling? Okay, that's not around 30%, 40%. How many of you think it's investing? Or it's just a financial product? It's okay, nobody. Okay, very interesting. All right, so we've been talking about risk, and I think now we will dive into the heart of our discussion, which is really on how social media has very much transformed the contours of financial markets, financial products, financial behaviors. And that's the main thing I'd like you guys to delve into more from a macro perspective, not just in terms of what we see day to day, but if you can also reflect in terms of, how traditional investors used to behave at the time of when stock markets were getting formed, because stock markets also not so old in India, What were the behaviors then, and how do you see things changing just because of social media?
Well, I personally love social media. I think it has done phenomenal amount of awareness about the financial markets. Like if you had to ask me if 10 people are financially literate versus 10,000 people will be financially literate, but maybe 20 of them gets bad advice, which one would you pick? Only having 10 people financially literate, or 10,000 people financially literate with 20 people getting some bad advice? So that is the question that we need to ask ourselves. Are we ready to accept magnified benefits to the society at the cost of some bad apples? That's the question to ask, right? Because quick growth always comes with a little bit of negativity within it. And the miscreants, the people who are scamsters, who are looking to make money through malicious practices, they will always find a way, right? Social media has just made it more easier for such people to do it. But does that mean social media is bad? I don't think so. If a 12-year-old, school-going kid is now talking about mutual funds, it's because of social media. That used to not happen 20, 30 years back, right? So I think that is number one. Number two is in terms of how easy it has become to build a business today. Um, Earlier, only people who had deep pockets to run advertisements, to hire movie stars, only those people could build a very big business in this country. But today, by having distribution yourself, what I mean by distribution in common terms, it's the number of followers you have or the number of people who trust you on social media. If you can build that, you can scale businesses even without having a lot of money, right? So I think that has never been possible before, and it's only possible because of social media.
Okay, so social media has expanded access, and you see it as a beneficial force which people can use for good or bad. Okay, Pranjal, you want to come in?
So, I'm biased. Definitely I exist because social media existed. I'm sure Sharan would agree. So it has played a great part in our lives. But broadly speaking, today, I think when I started with great passion saying ki, I read a lot of books. I watched a lot of business news channels. I read a lot of magazines, and yet I couldn't learn investing through magazines and through business channels. So let me find an alternate route. That was the passion behind it. But I think in the long run, on an aggregate level, some people are doing brilliant work. But on an aggregate level, I think as collectively as influencers, we ended up becoming the evil we sought to defeat in a way. We ended up, doing the same thing. So I understand that because of us, general superficial level of awareness has gone up. Everyone knows what are stocks, what is mutual fund, ETFs and things like that. But just because something is followed more and something is discussed more, I don't necessarily think it's also understood more. So, these days we talk a lot about spirituality, religion and things like that. But because these words have become buzzwords and they're cool to discuss and every college student is discussing it, I don't know what role we have played in actually ensuring that people don't take excessive leverage. People stay away from F&Os. I've been shouting to stay away from F&Os. People, even my audience, they tell me, I'm your huge fan, and the next thing they tell me, मैंने F&O में खूब कमाया. So, that defeats me also. It's very disappointing. So, I think superficial of level of awareness we have done. Lastly, one important thing, I think it's important that finfluencers, I don't know how it's regulated. I don't understand, how policies are made, whether it's RIA regulation, some other regulation, but it's important that we are regulated in some way so that it's not just one way. Even we will be protected from people who are not doing good deeds as finfluencers, so that the term is protected. Today, I hear the word finfluencer, and most of the times I know something bad is coming up attached to it. So if there is a framework and we are on the right side of the regulations, we can proudly say, no, 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 we are regulated influencers, and those are unregulated, ask them to get regulated. Whatever, whether in the existing structure or in the new structure, but some kind of regulation should exist to protect us also, not just to regulate us, also to protect us.
Yeah, so Neil, I mean, we're coming back to risk all the time, right? And you have seen traditional markets, you have observed them very closely, and you have seen what has changed with social media. So before we get into the SEBI guidelines, can you comment from your perspective structurally, what do you think is really shifting in the markets with the advent of social media?
Yeah, so huge shift. As a representative of traditional media, I have been on the front lines of that shift. Um, and I think that what has happened is a new concentration of power. So if you think of how many influencers can you guys name, right? If I do a straw poll, I think you guys will mostly come up with the same 3, 4 names, probably the 2 here and maybe 2 more, which is a huge concentration of power. Lakhs, millions of people following these guys. Should therefore they not be under more scrutiny? Should therefore they not be more strongly regulated? It's called risk-based approach, where if somebody is a bigger risk to the system, then the system needs to have stronger regulations. That is the principle that I would support.
Okay, so concentration of power, tool for awareness, need for responsible behavior. But that's a lot of pressure also on you guys as influencers, right? So how do you manage that balance between, there's a lot of FOMO in markets, there's a lot of new products, and you still have to stay balanced somehow in your advice. So how do you manage that at your level?
So, I think in finance and medical, these are two fields where you have to be really, really conservative. So, business wise also, and as a content creator also, I stay away from everything that's new. So, if it's an IPO, I'll not talk about it. If it's an NFO, I'll not talk about it. Bitcoins, I'll not talk about it. BNPL, these buy now, pay later cards, cryptos, I'll not talk about it. And I'll say, this is new, I don't understand, I'm away. So, I think it's very important. So, what he said, if lakhs and crores of Indians are actually dependent on, say, I'll put that number somewhere around 10 influencers, most of India is watching. I think that responsibility is huge. And see, I get where we come from. So what happens is, if there are 10 influencers, we know we need to bring out something innovative. We need to talk about something new to get the next leap of growth. So that internal competition of being creative, innovative, and talking about something new. But, the problem with that is when you're talking about newer things, emerging trends, it's hard for you to keep a check on something that's maturing and its legality is not clear. Sometimes a lot of products, they continue thriving in the market while existing in the gray area of the regulation. So I like to absolutely stay away from it. I think I want to do it I want to be in this space for 20, 30, 40 years, and I want to be conservative. I'll earn less. A few people will watch me, but I want to have good word of mouth. So I don't care about what new is coming. If it's new, I'm not touching it.
Okay. Sharan, how do you feel about it?
I think it has drastically reduced the number of new things that's coming now. I mean, at least I don't see a lot of new things happening in the world of fintech as opposed to last year, like what Pranjal was talking about earlier, that opinion-based betting, right? Those kind of innovative, out-of-the-box things I have not seen in the recent past. I think even founders and entrepreneurs, these companies are run by actual people at the end of the day. I would like to believe that fundamentally everybody is doing it for the right reason. Very few people, I would say, are starting a business to scam people. They themselves believe that this is going to help them, and they're also putting their money where their mouth is. So founders in general, if they're toiling 16, 18 hours every day, sleepless nights, and they're not even taking high salaries when starting these sort of companies, I would like to give them the benefit of the doubt, right? So I definitely have a conversation with them. I would like to see at what stage are they in terms of talking with the regulators. And most of the people that I'm talking to these days, they are already, in the advanced stages of talking with the regulators. And if it is something that I personally would want to put my money in, and I actually put my money in first and see if I like it. Like, for example, we were talking about fractional real estate investing earlier, and now it is finally going to be regulated by SEBI. But before it was regulated, I've been investing in fractional real estate, right? I like it. I also know the founders of, all the top fractional real estate companies in the country. So I've been an active investor in that. I've been making money. I've not been talking about it because it's a high ticket size, like minimum is 50 lakhs. But if it was, now I think finally they're going to lower the ticket size and all of that. Now it's going to be regulated by SEBI as well. Now I'll talk about it. But even though it was unregulated, I was still investing in it, right? Because at the end of the day, it's very simple. Investing is very simple, right? The more risk you take, the more money you make, right? If you are comfortable taking that risk and you know all the risks associated with that investment, then by all means go for it, right? Don't blame somebody else by saying that, hey, this person told to invest, so I invested, right? That's on you, right? If anybody is telling you to invest somewhere and you're going to blame that person for losing your money, that's on you, because everybody is responsible for your own money. You do the research and you invest. Even if you think that the risk is too high, but you feel like the returns are great. Like, for example, we were talking about Bitcoin earlier. There's no other asset class which has given as much returns as Bitcoin, period. Like, there's no argument about it, right? And I know a lot of people who become crorepati's before they turn 30. Now, what argument am I going to tell them? Right? You're not regulated.
Okay.
Why are you becoming crorepati's? I can't tell them that.
Okay, fair enough. So I think, so you're saying there's an argument the influencer should be experimental because that is his job, as you are trying to look at new assets and figure out what's coming out of them.
Influencer is like a news channel. Like, they're going to tell you something. But at the end of the day, what you do with your money is your own responsibility. Don't blame the influencer. Like, you don't blame a TV news reporter for telling buy stock recommendations,
Okay.
right?
So I can see Neil also like, so there is responsibility as an influencer, also responsibility to experiment as an influencer. Neil, would you want to comment on that?
Yeah, I want to comment on the crypto bit because recently the news came out that India's largest crypto exchange, WazirX, had almost half of its crypto hacked and stolen. Do you guys know how many Indian investors WazirX has? 40 lakhs. 40 lakhs people lost money and nobody's saying anything about it. You don't hear anything from the regulator. You don't hear anything from, I mean, no regulators in charge of this anyway. Um, all of the influencers who were busy advocating crypto in the boom of 2021, where are they now?
Okay.
This was never a healthy system, and especially like I said before, people who have millions of followers, there is a special responsibility on them.
Okay. So who comes in when the tide goes out? Like
I just
who's
want to
gonna-
add something here.
Okay.
That while it's very conveniently that I've observed this, that the media changes its stance based on what is happening in the market. But what Neil did not mention is that almost every single newspaper in the country accepted advertisements for cryptocurrencies. Now they will tell that okay, it's not them advocating it. Newspaper is like an advertisement board. Anybody can put anything on the newspaper.
Okay,
But I think that's not right.
I can see audience responses here. So the advertisement guidelines did come in for crypto, and I think the argument now is where are the guidelines for the finfluencers, right? And that's a process that is now underway. Neil, you want to unpack that process in terms of what's
I'll
been
just
happening?
ask you guys a question. How many of you invested in crypto because a newspaper ad was there versus an influencer putting out a video and personally saying you should invest in crypto?
Okay,
But both of us made money.
Okay, I'm moderating this, so we're going to go off. We're going to get into Finfluencer guidelines because that's the focus here. So, on the Finfluencer guideline process, Neil, could you speak a little bit on what's been happening? Like, what's the state of it with the SEBI?
Yes. So, in a recent FICCI conference, SEBI has outlined what I think is a very sensible approach. SEBI said, the whole time member said, कि हम सबके टिकट नहीं काट सकते, सबका चलान नहीं काट सकते. What we will do instead is we will talk to the social media giants, and they are talking to Google, by the way, to make sure that the social media giants themselves impose SEBI rules on their own platforms. So if a influencer makes a YouTube video which is violative of SEBI rules, then YouTube itself will take that video down. Now, what is the carrot? Why would YouTube do this? Why would Google do this, right? They make so much money from all these ads and all these eyeballs. The carrot here is that SEBI will whitelist YouTube or Google as a platform, and a SEBI regulated entity can advertise on the whitelist without worrying, are they breaking SEBI rules? So this will allow a stream of money to come into a whitelisted platform and at the same time have them comply with SEBI rules. So I think this is a pretty sensible approach that SEBI has taken. More needs to be done, but this is a good start.
And just for everyone's awareness, you are aware that there are these registered investment advisors, right, in India. So traditionally, those were the advisors. And now in a social media age, we're trying to come up with this new framework, right, which is on influencers. Prajwal, you want to comment on how this, since you're both registered RIAs actually, I don't know how many of you knew that, but they are registered investment advisors. But what do you see as the gaps in that framework for the social media age? Like, is the RIA framework applicable to what you're doing now as a influencer?
So the bigger issue is rather than the gaps, the issue here is that traditionally RIAs and all intermediaries were regulated on the basis of, so if you are a mutual fund, you are a broker, you are a PMS, RA, RIA, any intermediary, you had a one-to-one, some sort of a contract with your client. And thereby, because it's a contract, every affected person has a locus standi before the court that I suffered and they earned from me. The problem with social media is that I don't know who my viewer is, and I can't know. It's not even my fault. It's not even influencer's fault. You can't do their KYC. So there's no answerable. I'm not answerable to anyone because I don't understand who my audience is. And there's another part here that the regulation was created in 2013. It was discussed in 2012. Back then, doling out advice over social media was not relevant, not prevalent. So I understand where the regulation is coming from. Now, the last part is, why doesn't SEBI simply brings a influencer guideline and starts regulating? Because then the problem comes that you cannot curb free speech. So the free speech argument comes up. I don't agree with it, but I know a lot of courts might. Ki free speech hai, you can't say what I will say and what I won't say. So that argument comes. So SEBI, cannot just blankly create a and which is why SEBI has been really smart. What they've done is, instead of saying ki tum ye mat bolo on social media, because they know no one will listen, and they can't regulate normal influencers because they are not registered. What SEBI has done is that they are trying to cut off the revenue streams of unregulated influencers. So if you don't earn, your incentive of day in, day out going to the content creation market and create content is minimized. So I think that's very smart, very reasonable, and just what Neil mentioned about whitelisting, I think that's a very smart idea also. I did not know of that, but these two approaches combined should work very well.
How do you feel about that, Sher?
So the RIA, for those people who don't know, Registered Investment Advisor, is the only license in the country which allows you to give financial advice and collect money from the customer. Now, I recently took the license. It's a nightmare, right? The regulations are really, really strict. And anybody who wants to make a lot of money should not take this license. That is why you see hardly any fintech company having an RIA license. Banks also don't have RIA license. They are all very, very happy selling regular mutual funds and making lakhs of crores of commissions. Anybody who's taking an RIA license already knows that this is not the way I make a lot of money. I will burn a lot of money acquiring customer, and if that customer doesn't even pay me money, I am screwed. That is the gist of the RIA. Now, I don't understand why the regulations are so tight. The reason being, there is another license called MFD license, which allows people to do the same thing without any of these regulations, number one. Number two is that I feel that the two most biggest problems that any person has all over the world is money problem and health problem. But when you have a health problem, it is very easy for you to go and find a doctor. You don't have to learn about medicine and all of that. It's easy for you to go to a clinic, go to Practo, book an appointment and get all your, medication done. But when you have a financial problem, there is a massive shortage of financial advisors in this country. The SEBI number is 1,300 financial advisors, but the actual number of people who are actually practicing is probably less than 300 or 400 people. That's it. And the reason is why. Everybody wants to do it, but there's no money to be made. The regulations are so strict, right? So the only way to build a meaningful business of giving financial advice to people is to first have another cash cow, which is, let's say, for example, in my case, I have, my social media business, I have my education business, and that business supports the financial advisory business. I don't make money in the financial advisory business. It's going to take years, if not decades, until I make my profits. But that is what the customer needs, so I've launched it. But the regulations are so strict. I just wish I could talk to someone in SEBI and understand what the hell, man.
Okay, fair enough. I think these are two very extreme, and you're getting a sense of like how real the issues are, right? And we're going to take a few quick audience questions, so just get your thoughts ready. We just have 2-3 minutes as Neil comes in. Yeah.
So there are very few things that Sharan and I agree on, but on this, we are in full agreement. The RI regulations are too heavy. They need to be eased, and thankfully SEBI has proposed easing. I was part of the working group that made all these reform proposals, and they are in the public domain right now. People are sending comments. I'm sure Sharan might have as well. So absolutely, I'm with him on this. We need more RIAs to advise the people of India.
Okay, so we have time for 1 or 2 questions. I think our stage managers, yes, big hand up there. Yeah. Just introduce yourself, keep it quick, please.
Sure, thank you. So I'm Nitin Mathur. I'm representing a firm called Tavaga. We are SEBI registered investment advisors for last 5+ years now. And I'm like 20 years into investment industry. I was an equity research analyst with investment banks earlier.
Okay.
That's my quick introduction.
Yeah.
Now the question to the panel here is, if I go to the doctor I would not go and say, ki, hey, I mean, why do an MBBS for 4.5 years? Why not do an MBBS light for 1.5 years? So the panel has endorsed to SEBI that, just ease down the whole benchmark or, for the examinations and ease out and everything. So how does it help the end customer? And is this doing injustice to the customer because half-baked advice might be more risky than no advice? Thank
Okay.
you.
Got your question. Any other questions? We take them all at once. The gentleman over there, please. And one from the back, the person at the back. Yeah. And then if we get time, ma'am, we'll come to you. Their hands were up. All right. And yes, you can answer this question.
Hi.
Yeah, so to your point about when you go to a doctor, you don't ask why do you not have, you mentioned the analogy about MBBS light and all of that. My argument to that is if you want a very, very experienced person to manage your money, it's going to be expensive. People in India are not even aware that a financial problem exists in their lives. When you have a problem with your health, I don't need to convince you that you're not well. You know it, you're uncomfortable. So you're going to go to the doctor and pay whatever the hell that person is asking you, right? Probably you might not. Like if you go to a high-end specialty hospital, they might charge 2,000 rupees for a consultation. Whereas if you go to a slightly inexperienced doctor, he might charge 500 rupees per consultation. You're probably going to choose the second one. Same analogy here with a financial advisor. If you go with a really, really experienced person with 5 years of experience, right? Most people in India won't be able to afford it. And it's not that a person who has 2 years of experience is giving bad financial advice. Maybe they don't have the experience of real life scenarios. But if you can't even afford the person who's having 5-10 years of experience, then what's the point, right? Having the best possible solution and having a scalable, feasible solution are two different things.
Okay. Pranjal, you also want to comment on that?
I think you were worried about bad advice. What I think is a lot of regulational aspects that are there are in no way related to the advice. So for example, a simple regulation like you can't have a payment gateway. You can't collect payment via Razorpay, Paytm, Instamojo, something like that. Now that to me creates a differentiation between offline vendors who receive cash via traditional channels and allowing online platforms to scale. Not allowing me to take payment via a registered, regulated payment geteway, and I am a regulated entity. I think these practical difficulties that has nothing to do with advice. Advice you can improve by, making it mandatory for certain qualification requirements which are there. You can make them more stringent, more experience requirement. All of that I'm totally in. But daily unrelated operational issues, those should be eased.
I think the number of stories I would have of regulatory weirdness in our system are insane. I think the reason why we have a lot of unorganized labor is because our factory laws are so strict. You need a toilet by a certain dimension, and that's one reason why people don't open factories and offices, right? Question in the back.
Hi, my name is Arpit. I represent a corporate RIA. We are trying to start a business. And I wanted to see the panel's view on the relationship managers that banks have and some sort of advice like that they also given. Do you have any thoughts on that?
Anyone want to address that?
Yeah, I'll take a stab at it first. So 100%. I mean, today bank relationship managers have almost no regulation. Just yesterday we did a story on this. Often they don't even take the EUIN number, which is the distributor number. Is there a single SEBI order against any distributor, any bank RM? Nothing. There's no checking. It's just a complete free for all. And that is why I'm wholly in agreement with Sharan. We need easier rules for RIAs and we need tighter rules for distribution. There's no two ways about this. And insurance, of course, mis-selling. All of us know the story. You walk into any bank branch, first thing you're done is insurance policy is mis-sold to you.
Okay, we had one final question there. Could we please give that person a mic? And I know we're delving into risk, but there are also happier sides to social media. So we'll close on that.
Hi.
Yes, go ahead.
So just starting from my own understanding of the financial freedom, right? So recently I've been dwelling at different avenues, how I can basically get financially independent. Looking at this, was kind of bent towards the equity markets and let's say it's the stock education side of it. And when I dwelled into this, I saw that the content, as well as multiple players who are in this, are providing knowledge just for the sake of earning, money from education like majority of the people do. The success rate of people who are earning money from the stock markets compared to the number of people who are losing is a clear, evident understanding of where this is going, right? I think one more stat I read, and please correct me if I'm wrong, out of the 10 crore demat accounts that are open, more than 8 crore just have 10,000 rupees in it, right? So my
So what's
question,
your question?
yeah, my question here is the quality of financial advice, right, as well as the quality of education given to the youth. Is there a way that this can improve and
Alright.
when be more experiential?
Okay, we're out of time, so thanks for the question. Any quick responses on that? You're basically saying you want good quality advice, but it should be free. They shouldn't be earning from education. Is that what you're saying? Okay, got it. Any responses on this? Anything you want to say? I think you addressed it actually already. All right. So
Just allow us an opportunity. Of course, we'll request you to respond. Also, if the panelists are okay, would you be open to extending a little bit more for the audience questions? All right.
yeah,
Thank you.
Your timer was.
Yeah.
Yeah, I think it's an ongoing process. Fairly new industry, the financial education space. Until now, it's been very unorganized. Only now we are seeing some organized players trying to take a stab at this. But I think education fundamentally, not just financial education, education in general in India has a lot of room to grow. It is, primarily based on memorization. Experiential learning, of course, is the need of the hour, but it'll take a lot of time until we reach a point where, like, let's take trading, for example, right? A lot of people will argue saying that, why should you teach trading? Only 1% of the people are actually making money. But if I were to ask you, like, did you prepare for, IIT or IIM? Did you do that? You didn't do that. But how many people have prepared for IITs and IIMs here, right? Not as many as I thought, but back in my day, almost everyone did. But the success rate of IIT and IIM is like 1%, and there are huge billion-dollar businesses built on top of it, even today, right? Why are people still preparing for that if the success rate is low? Right? So just looking at the success rate and saying I should not learn is probably also not the right thing to say, right thing to do. There might be like, that 1 or 2% who after being given the right kind of education, they might be a good trader, right? And traders, if I were to tell you, I just came back from the US. Chicago is the global headquarters of trading companies. And people there at the age of 31, 32 are making millions of dollars. Like when I mean millions, they're making like $4 to $5 million as bonus. 28-year-old guy, right? So if you think that you have it in you, you should definitely take a shot at it, right? For example, another sport, let's say cricket. Like if my son says he wants to try to be a cricketer, I will not tell him, 0.0001% actually make it. It's a waste of an exercise. I will not tell him that, right? So I will still try to put him in the best coaching center. So I'm looking at the success rate is not the right way of saying, hey, why teach this or why make money from this?
So I have a slightly different perspective on this. If you think of any field, medical engineering, to start a medical college, you need a license. For engineering, you need government approval. Why is finance an exception? Why can anyone just get up tomorrow and say, I'm launching a course? Zero regulation. Nobody's checking what is being said in these courses. And many of them are actually disguised trading tips. They are given on Telegram groups or WhatsApp groups in the name of education. Nothing, zero regulation. So I honestly don't get what's happening.
But even with all the regulation in engineering and medical colleges, I think the education was still shit in my experience. So I don't think having regulation over something will make the education better. I think the education, even with regulation, is kind of shit in this country. Just being honest.
You know, while I agree with a lot of what Sharan is saying, I agree to a lot of it. One point I disagree is that, wherein he mentioned that a lot of competitive exams have a very low success rate in cricket team, and which is absolutely true. But look at the other part. Preparing to be a cricketer, and if you don't become a cricketer, you'll still be a good, fit, healthy sports person, right? You will be fit. It has benefits. Even the preparation has benefits. UPSC, if you don't clear, probably that preparation will lead you to clearing a bank exam or a state PSC exam. The process in itself is good. The problem with trading is not the success rate. The problem is that if you lose, it's not that you won't make profit. Your house, your car, your family life will be affected. It's not limited to that. And secondly, the process itself is addictive. And the process, if you don't end up on the right side of it, which 99% don't, you end up achieving nothing. The process doesn't make you a better person. The process doesn't give you the tools required to be better in life. So that is why, personally, I am a little against trading and absolutely against F&O.
Okay, we have two. The lady on the green, please.
Okay. So first, let's give her the opportunity on, ma'am, if you can just say your name and, of course, whom you'd like to address the question to in a concise question.
Yes. So my name is Pratishtha and I'm from Mint, and my question is to both Sharan and Pranjal here. Sharan started by talking about the investment behaviors of this social media generation, which is frustrated with their salaried jobs. But what we're not looking at, how there is a big freelance, gig economy trend in this generation, that they're not salaried or not employed but working on gigs. In fact, as creators, you yourself have worked on that freelance setup for years. So I want to understand about the financial solutions for this type of earning set in this generation that is not salaried, is receiving inconsistent lumpy incomes, and how would they probably save, invest and work with it so that they can work with it and retire early, for that matter.
Yeah. So fundamentally, investing is same. I would say across all kinds of people. I get this question a lot. I'm not from India. I'm living in this country. I'm a businessman. I'm a freelancer. I'm a single mother. I'm a doctor. Everybody thinks that their investing has to be, very, very different based on what their job is. But I think what I personally believe is that investing at the end of the day boils down to your financial goals, right? No matter who you are, what you do, everybody has financial goals. So you have to pen them down first. Now, the only problem with, let's say, a freelancer is that there's no predictability of cash flows. Like as a salaried person, I get every month. So I can easily calculate the SIP amount that I need for these financial goals and I can start investing. But for a freelancer or a business owner, you can't do that. So I would say, do it on a yearly basis. On a yearly basis, you can definitely have better predictability of cash flows, if not monthly, and then invest as per that. So instead of looking at it from a pure SIP mode, look at it from a quarterly basis or a yearly basis. The financial goals are still the same. If I'm a freelancer, I still want a house. If I'm a salaried person, I still want a house. House value could be the same. So the investment amount will still be the same on the yearly basis. Just that as a salaried person, I can do it monthly. As a freelancer, I'll have to wait until the money comes and then invest. The problem is, suddenly when the money comes, we are human beings at the end of the day. So as a salaried person, we're getting small amounts of money, so we are more careful with it and we invest it wisely. But as a freelancer or a business owner, suddenly when the money hits our bank account, we are human beings at the end of the day and we might not invest it and we might use it for the wrong reasons.
Sure. Thank you so much. With that, just one final question. We'll give it to the lady ahead. Concise, your name and, of course, whom you'd like to address it to.
Thank you. My name is Kavya, and I had question for all three actually. So earlier there was a time when there was a lot of information asymmetry in financial markets, right? But now I feel there is an information overload where, for example, I follow both Sharan and you, but sometimes the advices that you would, the suggestions or the videos that you would make would be in completely opposite direction, right? And both of you will have very valid points, very valid arguments that would justify that. And doing my own analysis as well, both would seem like a good to go option. But which way do I choose in that situation? I think basically just navigating through the information overload is, how would you suggest one does that as a investor?
In general, and it's not just about finance creators or even content creation. So if I'm consuming content of a space which I am not an expert in, and it's not about who's wrong or right, because investing is, or personal, specifically stock investing, is also an art. So in art, like any art, music, cricket, a Sehwag who has a risk-taking approach is equally successful as a Dravid who has a conservative approach. But as someone who's not from the field and who's consuming as a beginner, when you are confused, one mental model that I follow for myself, this is not a specific use case, but I follow this advice when I am consuming, is that when I'm a beginner, I'll stick to the more conservative advice. Out of the two, दोनों में से क्या गलत हुआ तो I'll be safer. So I'll look at something that's more safer and conservative.
I'll give a very quick rule of thumb. The more entertaining it is, the less accurate it's going to be. The more you have somebody singing and dancing and doing skits, the less accurate it's going to be.
All right. So I think we wrap the questions. We're just going to move to our closing comments. So we've dabbled a lot in the dark side of social media and the risks, but there are a lot of very new things it's unlocked for India. And I think all this enthusiasm around the financial markets growing, I think it's going to be a big, social media is a big force behind that. So what are some things you're really looking forward to? What are some maybe new products, new services, new things that you think are really possible with social media, with new technology like AI or quantum things like that? Any things like that you think about?
Yeah. So I'm very, very excited about how financial planning services can be disrupted with the advancements in technology that we are seeing unfold in our eyes right now. And one interesting use case I can think about is how the account aggregator framework can be leveraged upon by RIAs, and by feeding that information to a well-trained AI model, which is fed upon actual transcripts. Like, for example, let us say I have thousands of hours of financial advice being given by actual human advisors to people, to millions of people or thousands of people across the country, and banks would have this data. And if you can feed that data into, let's say, ChatGPT, and create a very good AI model, which again, when fed on my own personal data on account aggregator, can give me some very, very customized answers, even better than an actual human advisor could, because it has access to all of my data so quickly that it is not just giving, that system is not just giving advice based on a hunch. And by the way, this model will also have access to the market data, right? So I'm very, very excited to see how this will go. I think SEBI has also mentioned little bit about this in their recent paper, but who will take this opportunity and build on something on top of it? That remains to be seen. I still think it's too early, because people will be very wary about trusting an AI for financial advice in the beginning. But let's say 10, 15 years from now, if you want to bring down the cost of financial advice, let's say to like 100 rupees a month, this is the way to go.
Okay, very interesting. A personal assistant, or personal financial assistant. Yeah.
So, as an investor, as a creator, I mentioned that I like to be stay away. I like to stay away from anything that's new, anything that's emerging, because this is a high risk space. I think as an entrepreneur also, I don't get excited by anything that's coming new. Honestly, I hardly use AI. Sometimes, rarely, I use AI. I don't know much of the things that are in the pipeline, or I'll say I'm also biased. I stay in Raipur. My company operates from Raipur. So a lot of innovation conversations. So I've done my year's worth of networking today. I don't network. I sit in Raipur and I'm in my well. I don't understand dunya mein kya ho raha hai. And it has its pros as well. I sleep very, very peacefully. It's very nice. I'm never in a rat race. So I stay away from innovation. To innovate, you have to be in a certain, at times, कोई देने लग जाएगा जब mainstream हो जाएगा. So whenever any new innovation is mainstream, I buy it from a vendor and I'll copy the execution. हम लोग phenology में we always copy our competitors, execution our way. We never infringe on the IPs. But I think that R&D risk is reduced when you don't innovate and you copy. Your go-to-market cost is much cheaper and it's more conservative. Regulator ने establish कर दिया ये हो सकता है ये नहीं 4 player और कर रहे हैं मुझे पता है बड़ी मछली को पहले पकड़ेंगे. I like doing it that way.
Okay, so once Sharon makes that personalized assistant, you will subscribe to it. That's what you say. Okay. Neil, you have the last one.
Yep. So I'll talk about 3 products that I'm quite excited about. One is SEBI's proposal to bring in a new category of mutual funds. So I rely heavily on mutual funds in my own investing journey, and SEBI is suggesting that let's give them some more flexibility. Let's have this category for slightly higher ticket, which will give us also tax efficiency, but lots of new kinds of ways to generate returns. So that could be quite interesting. The other 2 that I also mentioned earlier, so SM REITs, which brought fractional platforms into the mainstream, it'll unlock a lot of real estate. It'll give us a chance. People who can't afford houses in Bombay, it'll give us a chance to invest whatever little we have into real estate, or to small extent, to certain extent. And the third, of course, is bond platforms. Again, in this market, everybody only thinks and talks equity, but bonds are there. There'll come a time when bonds will become quite compelling, and I'm glad that this ecosystem of regulated entities has been created by SEBI.
Great. So that's a wrap, guys. I think we covered a big gamut of issues. Big hand to the panelists. And thanks for your time.